We're going to start our next session now, which is going to talk about CFOs of 2025 and beyond. The topic is going to deal with chief future officers, balancing the long and short-term priorities. The session would be moderated by Sumana Sarkar, who is the Bureau Chief, Financial Express Digital. Joining her on the dais would be Mr. Abhinav Jain, who is the Chief Financial Officer from CoinDcx, Rajendran Arunachalam, who is the Group CFO of Thermax Limited, Rahul Tewari, who is a CFO from Games 24/7, Vikas, Jalan, CFO of PayNearby. I welcome all the panelists onto the stage. Thank you very much. Yeah.
Good afternoon, all of you. And after an amazing lunch, we are on to starting this very interesting conversation. CFOs of 2025 and beyond. So what are, we are calling the chief future officers. Somewhere at the beginning of our date yesterday, we were talking about how CFOs and CEOs are now partners to growth. So how exactly are you balancing these long-term, short-term priorities, making your businesses future-proof? If I can start with you, Vikas.
Thank you, Sumana. And is everyone back here, or? I think those who are back, maybe welcome back. And so thank you, Sumana, once again. So just to get started, first of all, the theme of the conference itself very much resonates with the question out here. And as a key role in the company, CFOs today are expected not only to do what is business as usual, we call, but also to spend a significant amount of time looking at the future. So just to give an example, in our company, PayNearby, we are a fintech platform working on disseminating financial services in rural and semi-rural areas. And one of the areas we have picked up is to create financial inclusion in the women entrepreneurs in the rural areas, and we call this program as Digital Nari, okay? And one of our focus is to invest into that program while running existing programs for the company. So just to give an example that for us, not as a CFO function, but also as a company, it becomes very important to invest into the future. With this, I will pause and give it back to Sumana.
Abhinav, if I can ask the same question to you. You are in an industry that probably doesn't have a precedent if we go like 20 years behind. So what is your roadmap like?
No, I think it's a very important question, and CFO play a very important role in these type of situation. Most of the time we're stuck in two things. Either we focus on short-term goals or long-term vision. Say, for example, a company which is at its initial stage, should they focus on profitability or they focus on gaining market share? In the reverse situation, should a company focus on disrupting and giving huge discount and screw their profitability? Both the situation are more or less same. One need to understand which is sustainable from long-term thing and which will create difference for them in long term. So if a company focus on the profitability and lose market share, probably they will not be able to grow big, become big in a long-term thing. But if a company don't ensure their unit economics in place, they'll not be able to grow at any point of time. So the only solution is you should have a sustainable solution. And if so we might have read in economics also, one should focus on wealth creation than to short-term profitability. Because once you create wealth for years to come, business will become easier for coming generations. And one thing I always keep on saying, so in years, role of a CFO evolved significantly. They used to be controller, now they are business enabler. And CFO are the only guys who understand finance, and whatever a company is doing, at the end of the day, is not, things are not translating into finance, that's not going to make any sense for investor, for all the stakeholders. So CFO are well positioned to take this critical decision when to pivot and where to pivot. And apart from that, they understand business because they look at all the aspects of the business. CEO is always more attached to business versus CFO, who is more attached to money, and they are better positioned to take these type of decision. So management need to, management are empowering CFO for these type of things, and for that particular reason, we are seeing so many changes in the industry, and they are enabling more and more growth for the entire ecosystem.
Rahul, would you agree with that?
I think I have to agree with the thoughts that are shared here. I think the CFOs are the only CXOs who have this unique position that while they have a very microscopic way of looking at numbers, they also have the ability to have this telescoping vision, right? And it's a very tough balancing act to kind of think about how do you preserve value. You shouldn't do something disruptive in the short term that can destroy value, but at the same time, you have to invest in technology, in product, in infrastructure, and people. And I think it's a tough thing because you have to create those opportunities. You have to do capital allocation in a manner which increases, as you were mentioning, value creation is the most important thing. And you have to be that co-pilot with the CEO. The CEOs typically are very forward-looking, growth-oriented, and while the CFOs believe in that vision, you have to make sure that there is enough cushion available when you're making these long-term bets. So I think the CFO's role is getting more and more under the spotlight, and I think the new cohort of the CFOs that we are seeing are actually doing an excellent job in kind of guiding the company's strategy going forward.
That's a very interesting point. And Rajendran, if I can come to you, you represent a public listed company, and when we talk of future, the unique challenges or unique key things that you have to keep in mind, for example, the sustainability aspect of it. So how are the goalposts changing for the CFOs for tomorrow?
Thanks. Chief Future Officer is the first, at least I'm hearing it for the first time, that CFOs are being called as Chief Future Officers. Future, of course, gets connected with the strategy piece for an organization. And from a strategy perspective, I think while all organizations are required to look at how they're going to sustain their business, their profitability, their growth into the future. And CFOs, I think, have a very strong role to play in all of them. But just addressing the specific question that you asked in terms of the sustainability agenda that's coming on the table for all the corporations, including us, this is, I think, a no-brainer. Even from a personal perspective, I'm sure all of us agree here that the tomorrow is fraught with danger, and unless we transition to a sustainable economy, we will not find a future for all of us, including our businesses. And there are some businesses which are really threatened, and some which could be directly or indirectly. So I think the perspective of embedding the sustainability goals into our organizations and making them relevant for us to track and perform is very important. And I think that's something that most organizations are getting onto, given the push from the regulators or from the financiers and the ESG as a buzzword that's happening around. So I think that's something that I think today we can't ignore really.
Something that comes out from all of your observations is the tightrope between growth and also fiscal prudence, or what is financially viable. So in that context, Vikas, if I can ask you to explain with some use cases perhaps that, how do you manage that?
Thank you, Sumana. And this is a very interesting part. I would just like to, add to what the rest of the panel said about looking at this strategy, right? When we look at the future, the role of CFO also is to see how are you able to execute the strategy, right? So in that context, many of us face this challenge, what not to do and what to do in terms of strategy, okay? And if you really look at examples which are ahead of us, right? Everyone knows that quick commerce is an area which everybody wants to do it, whether it's Amazon, Swiggy, Blinkit, everyone and newer players are coming in. And imagine you're in one of those companies and you're being asked to approve plans to invest into quick commerce. How are we going to react to these kind of questions? Any audience, anyone has a view from the audience? I'm sure everyone has used quick commerce. Yes, sir, in the back you have...
Can we take the mic to them?
So you can look at what the client benefits are and then look at that approving the proposal, whatever you receive.
Thank you, sir. So just, I think I'll just like to share my thoughts here is that one of the challenges that I face on a day-to-day basis in terms of what not to do and how to work with the CEO to actually convince him to do fewer things but more powerful. And this particular example of a quick commerce is something which all of us are facing in our day-to-day lives on a regular basis. So my submission to the audience here would be that from a long-term perspective, if you're looking at strategy, it's quite important that we look at the long-term strategy with a very, very sharp focus and take actions to execute those actions without digressing our methods and capital allocation. Thank you.
Rahul, if I can ask you to elaborate on the same point that what Vikas was making, that what not to do. How do you reach that point, or what is the cutoff for your, where do you say no to your CEO?
I think my experience has been that your ability to say yes has to be enhanced. Because typically what the CFO's office has been known for is saying no to things. And I think the ability to say yes is not something where you are falling in line with the party line or what the CEO is saying, but actually being very grounded in the operations and your ability to actually see the long term. I think one way to do that, at least at Games 24/7, is how we've architected the CFO's office. For example, corporate development and M&A is part of the CFO's office. So at times, we've removed that entire trade-off, between the CEO and the CFO. The CFO office is actually the one which is championing inorganic growth. And it's actually the rest of the CXOs and the leadership team that is pushing back on, why you should not do that. The other thing that we have done very well, I think, which is a hallmark of gaming companies, is like that we are drowning in data, right? It's like billions of games that we host on our platform. And we have to pick that signal from this entire noise. And so the CFO's team, the FP&A team has been elevated to a business intelligence unit, within the organization. So we are actually swimming with the business and kind of, learning the business as business partners. So this is also a very important way in which we have architected the CFO's office to make sure that this friction between, what we're talking about, the long-term, short-term, the growth versus retention of value, does not naturally kind of, stop the entire strategic thought process. In fact, it is an enabler for that process.
Rajendran, would you agree to that? Like, as what according to you are the top 5 challenges that CFOs are facing in trying to make businesses future-proof or their future journey?
I think a wonderful example from his end in terms of how the CFO office is getting structured in a new age organization. This thing, mine is a more traditional, and organization is more than 50 plus years of age. We may not have transitioned to the extent that my co-panelist is articulating. But I think our positions have evolved from being someone who is able to provide insights about the business operations, providing insights for what are the risks that are coming in the various businesses that we run. From there, I think we are now looked upon as someone who should come out with strong support and help for the future growth of the organization and profitable growth in that sense. And so identifying opportunities therein, identifying models that will enable us grow in each of the businesses that we are present in, helping the business navigate through some of the challenges that they face as soon as they get into those particular businesses. And then you have so many regulations which come in each of these businesses, and so which stifle the growth possibly. How do you get to help the business? And that's the partnership, I think that's which is being expected strongly from CFO table at this point of time. So I think there is no ask on information at least from the CFO's table at in setups like us, because I think the information is now freely available, has been made available through various means of digital adoption that we have all done over a period of time. And so that's, I think, no longer an ask.
Abhinav, on the same point, like what Rajendran was talking of, adapting to various digital innovation. So how when you chart the roadmap for CFOs going forward, where do you see the role of technology and some use cases, if you can, as?
See, I always believe future belong to those who are fast in adopting changing technological landscape and changing business dynamics. So if you don't adopt to these things, in the longer run, your survival will be very difficult. For a CFO, they need to partner with the business. They are actually co-pilot to founders, CEO in driving the company. They have to ensure they decide right at right time. If you take enough time to decide right, chances are there you might miss the boat. So technology plays a very important role in a company. I keep on quoting this example. A series of development in a candle will not make it electric bulb. So you might be doing multiple things in your life, but they might not be relevant from future point of view. And see, we have seen a good amount of disruption in our life. During COVID, most of the companies uh, were not transitioned to technology, but COVID taught them how to transition to the technology. So the most important thing in today's life is resilience, because technology is changing fast. Customer demands are changing fast. Landscape of the industry is changing fast. You need to ensure you take right decision, you invest in right technology well ahead of time. Uh, matlab, there are a good amount of chances whatever you are deciding will not succeed. But if you take risk, you will succeed. But if you don't take risk, it's a recipe for disaster. Thank you.
Yeah, so when you're talking about take risk and not taking risk is a recipe for disaster, if I can ask the same question back to you, Rahul, that, like where do you draw the line, or what according to you is the point which tells you that, okay, this much is enough, or I can go beyond. So what would be your perspective on that?
I think it's a multi-dimensional problem, risk today. I think it is not only about the financial risk that can play out in your business. And as CFOs, you have to be very mindful of that. And I can talk about the gaming space. I think just the customer behavior can change pretty rapidly, right? And the technology can disrupt your existing business model. There could be other sorts of, talent. War for talent, we've seen that, during the COVID times. And then regulations, right? I think we've dealt with some very severe regulatory and taxation issues in the past. But I think the way to think about risk from a financial point of view is also an important one. So that doesn't lose its relevance. When you're kind of trying to leap forward and you want to do something very audacious, something which is very ambitious, you should have sufficient cushion, right? Financial cushion, the balance sheet strength, or the ability to kind of deal with adversity. Because what I've seen is sometimes multiple things play out at the same time, which takes you off guard. And it's only the CFO that can provide that sense of calmness during those times of adversity. And that calmness will definitely come from the fact that you either you have very solid unit economics, which is guiding your current business, or you have enough cash cushion on the balance sheet. So it's so that's where I think your ability to know will come from the fact that if you're taking on too much of risk, that if a lot of variables go haywire, you don't want to land the company in distress, because that's where the board is going to come after the CFO and say, why didn't you think about these scenarios? So whenever we have a discussion about risk with the board, typically, we will present different scenarios that help the board take that decision. And I think that's how has been my experience at Games 24/7.
When we talk of the challenges, Rajendran, if I can start with you, of talent acquisition and retention, it's an industry-wide concern. So sitting from the CFO's vantage point, how do you look at it? Is it a challenge for you or something, an opportunity?
I think while I think a panelist did mention about the post-COVID challenge that he faced in terms of talent retention, that was, I think, at a very high level for organizations like yours. Even organizations which are, pretty tenured in this thing, we also faced a lot of attrition challenges during those 1.5, 2 years of time, which has come down now reasonably. So attrition is a common problem, and from a CFO desk, if I were to look at it as to how we are sort of addressing this, work rules, I think, has changed completely post-COVID. I think the flexibility that the organizations are now offering very clearly in terms of time, place, working and ensuring the outcomes are being delivered. I think that's something that I think most organizations have adopted. I can, quote in my organization case, we haven't still made any compulsion in terms of people coming back to office or working for a certain number of days or being present for a certain number of hours. So there is a lot of flexibility being given to employees to focus on the outcome rather than the place and the time. Otherwise, I think the challenge today is to offer roles that are interesting for people, to combine traditional roles like, let us say, a finance role being combined with a data analytical role, being part of the IT setup, which is, driving the digital adoption across the organization. I think roles which combine more challenge is, I think, what is going to help us retain talent, give them exposure to areas that will lead to a well-rounded growth, and who can possibly step up to become the future leaders for the organization. And then I think there are traditional things in terms of rotational leadership, pushing them to different parts of the organization to learn better. I think those are the time-tested strategies of retaining talent.
Because if I can ask the same question to you, you belong to an industry that is relatively a new age, and compared to what Rajendran was talking of, more of a legacy, this thing. Is it any different, the challenge for you, or how are you looking at it?
Sure. So I would say that talent management for us also is the most complex. I'm sure you're going to ask those questions, but if I have to take that question now, it is the most complex, and my advice to everyone would be to not take it lightly at all, okay? For us, a few things have worked well. So for example, a very, very strong employer brand. So we take a lot of effort to make sure that people understand what PayNearby brand is, what's its mission, what's its purpose. So when they're able to relate to that mission, purpose, you are able to connect with people for a longer period of time. So I'm happy to say that we are in the 9th year now, and some of our folks are there for almost 8 to 9 years. Almost 100 people who started in the first 2 years have been with the company for the last 8 to 9 years. So what has really worked based on surveys and external benchmarking, we realized that their ability to connect with the purpose, and just for the sake of repeating, the second we realized that for each of the leaders, what is their personal brand? And as CFOs, how are we able to connect with our teams and below teams as well? So I think that's the second most important part. The third, what we have seen, and I would agree with Rajendran here, that while COVID has given us some learnings, but it's important that one of the biggest learning is to give flexibility to people. So many times you've tried to get everyone in office, but that hasn't worked. And we've learned that give that flexibility to people, because with that flexibility, people are able to give better results. And they're also able to personally be happy and give better results at work by being flexible, okay? The last but not the least, I also see that for CFOs to be able to connect with teams and understand what each of people motivations are, right? Somebody wants money, somebody wants recognition. So there are different facets of motivations. How we can work towards understanding more about our team members is extremely critical. And one of the things which I have done in my team also, just to give an example, that while we have the corporate HR, within the finance team, we have a person who is very high on emotional intelligence. So because, especially in finance, you will realize that we are mostly with too much of numbers. So we have one or two people who are very high on emotional intelligence. They understand the pulse of each and every team members. And sometimes they help influence HR decisions, people decisions. And that helps us keep the whole crew together, well involved, transparent, and some of these have been working extremely well for us. Thank you.
That's a very interesting point that you raised, where EQ, I think, Abhinav, you want to add some bit to it?
So I think it's we all are facing attrition thing in our company and in our companies, and it's not a new thing. I always believe there are three things to look at it. First, you should always inspire your team, and you should lead by example. If you do that, team will connect with you. Second important thing here is create a transparency. Till the time you are able to give growth charter to your colleague, your junior, they will continue with you. Once they are not seeing any growth story or growth roadmap, it is actually not correct to retain them, to let them go. And see, if you have transparency within your team, your colleague, you connect with them properly, you have a good roadmap for them to grow. These all things eventually will help company to grow. If a person is leaving and you're replacing him with a new person, the new person who is coming in will take good amount of time to learn the business tactics, and eventually he need to invest more and more time. He'll not be able to he'll not be able to become an asset immediately. He's going to take good amount of time to give you result. So we always think whether the guy who is leaving is do you have a growth charter for him or not? Whether he was doing well or not? And then you decide whether we have to continue him or we can replace him.
That's
And even replacements are good. Reason being, someone who is coming new, he'll look at things from fresh lens. And this will at times give you new perspective to do things in a more evolved way.
Very pertinent point there. And we are around the halfway mark on our conversation. So I'd like to, before we take this conversation forward, I would like to ask if any one of you have any questions here. We can take 2 or 3 questions. If we can get the mic to the gentleman here at the first table.
Good afternoon. It's very heartwarming for me to know that 4 CEOs are giving kudos to the human capital function. In fact, I'm a strategy management consultant specializing in human resource management, right? And the last thing that CFOs want to know, rather the most difficult thing with a CFO is getting budgets for the HR function. Because while the inputs, costs can be quantified, the outputs cannot be justified very often, or there is no nexus between the two. And when I see CFOs with such a high level of maturity, now the gentleman said, exit interview, do we have a growth charter for him? Somebody said lead by inspiration. Somebody said very important employer brand. I had difficulty explaining this to my people that what is employer brand. They thought something like Lux Sabun. Practically that was the, I'm very pleased to know, and I would have rather a counter question to all these CFHOs. How did you get to know this information and knowledge? And how did you help HR to do its job better?
Well, go ahead. No, I think an interesting anecdote came to my mind when you said the intangible outcomes, that there's a conversation supposedly between a CFO and a CHRO. The CHRO pushes for a training of a person, and the CFO says, what if that person leaves? And the CHRO asks him, what if he stays? So I think, that's the issue on the intangible outcomes.
So thank you for picking up. I would only say that, we've also learned that taking out people is relatively easy, if I have to just say that, okay? But keeping people is the most difficult part, right? So if you would see that our function also needs to keep the long-term cost sustainability. So if a good guy stays with us for 10 years, think about the cost benefit it's going to have, because the productivity and the efficiency that the company can garner from that colleague of ours is going to be tremendous. So at the end of the day, see, CFOs, it's all coming from that hat of cost. That, okay, there is a motivated employee with a purpose who is there for a very, very long period of time. And this longevity is going to ensure that, your customers are going to stay for a long period of time. So customers happy, it's that circle that everyone talks about. I hope that helps.
The next question, the gentleman there.
Hi, Vikas. Sriram from Finalizer, and this question is for you. We spoke about customers, we spoke about employees, and various facets in the short-term and long-term priorities. What has been your experience in benchmarking the finance function from an excellence point of view versus what is happening within the industry, and trying to, better deal with the future? That I think is a dimension that I couldn't see coming. Probably there are experiences that you have which you may want to share.
That's an excellent question, Sriram, and I can say that few years back, I used to be a big fan of benchmarking. I used to be a Six Sigma consultant and used to be a huge, huge fan of benchmarking. But when I look at it now, I see that one has to look at from the perspective of the environment one is working on. So, for example, when I take the context of our company, PayNearby, we are running 2 ships as of now. So we have an existing business, which I think we are all talking about short-term priorities. And we have a future business, which is the long-term or a medium-term priority. And each of these businesses need skill sets to be invested. So at least my experience has been that in our environment, while we do some very, very high level of benchmarking, but the most critical benchmarking is mostly with the peer companies, if you have one, in our kind of setup, it's difficult to find a peer company. So for example, our peer company is 25-year-old doing the same kind of volumes, and we are 9-year-old with the same kind of volume. So just the perspective, I'm sure Rahul and others will have some more to say.
Yeah, I think I agree that benchmarking is important, right? But it cannot be the North Star, for the finance organization in particular. Because I think what are the metrics that you would use typically? I think productivity, right? In terms of, how productive every finance professional is. And that I think is very contextual, right? And we have seen that the effectiveness and productivity actually are, two very competing objectives for a company. There are phases, for example, I can relate to a time when there was a lot of, GST disruption. At that point in time, we had like war rooms, right? We were not so much concerned about, let's say, benchmarking the productivity, but more about, what is the effectiveness? How can we overnight transform the entire product architecture of the company to be able to deal with, a severe blow to our profitability? Now, how would I benchmark this? Because no other company would be undergoing this similar kind of, challenge. So I think it's kind of more nuanced. So I agree with what Vikas was saying. Benchmarking is important, but long-term metrics can still be benchmarked. I think that still is important.
Sorry, I want to add one thing here. So I always believe benchmarking is very important. See, in whatever thing you guys and anybody is doing, benchmarking will give them external perspective. That is number one. And benchmarking will always help you to evolve. This is a law of average. If you do everything average, your outcome will be very good. If you are doing everything above average, your outcome will be excellent. So benchmark will give you a perspective how others are doing. And if you can excel in it, no one can stop you from being a superstar.
The next time for one last question, so please.
Yeah, hi, I'm Sumana's colleague. This Chief Future Officer is very inspiring for us, but how much into future can a CFO think of today in such a chaotic world? And second is, there is the scenario like, for example, in the global case, there was this Chipotle, for example, the CEO there. He did well, he brought in new elements and then was moved straight to Starbucks. So the CFO who's working, let's say in Chipotle or Starbucks, has suddenly now a new CEO to contend with and a new approach, new strategy and all of that. So how can some of the changes be made more systemic, if at all?
I think it's a tough one, right? I think it's all about how do you balance this, and I think things will keep on changing, strategy will keep on changing, but I think at least my experience is that what they say is culture eats strategy for breakfast. I think it's that is I think what can sustain you through all these disruptions, and I think if the CFOs or the leadership team keeps on focusing on things that are more important for the longevity of the business. I mean, the business cycles keep on changing. The agenda of the organization will keep on changing. Sometimes it's growth, sometimes it's profitability, sometimes it's some other transformation. But I think if you have not invested in things like talent, if you don't have a strong tech stack, if you don't kind of have open culture, which promotes creativity, you don't have why centricity, in the organization. Those are challenges that you'll not be able to kind of overcome if you are faced with adversity. So I think it's a tough question to answer.
Rajendran, you wanted to add a point to that?
So interesting question as to how far into the future can the CFOs look into. I think we primarily think that's the CEO's job to look into the future and guide the organization. Now that you have put us as the chief future officers, then I think it's a challenge. But I think I'll go to the, time-tested thing to say that the CFOs of the organization, have an edge in terms of being able to think about the organization at a macro level, unlike the other, CXOs or the other functions. That ability, I think, if well utilized, and with a keen understanding of the external world as it is developing, from a regulatory perspective, from an economic perspective, from an, let's say, the geopolitical issues that are developing. Let's say, take a case in point in our situation, we are trying to pivot ourselves into the renewable energy space very strongly to cater to our customers' need in terms of solar, wind, green hydrogen, bio-CNG, so on and so forth. But the space is ever evolving, and every day you open the newspaper, there's something or the other happening on this particular space in terms of the competition or in terms of the regulation or in terms of the new thinking on the technology that's coming in each of this. So I think you have started your business journey on each of this with a certain business model in mind. But I think all these things which are happening around you tells you as to what you need to modify, what you need to change. And I think if the CFOs not alone, but can co-create along with the CEOs to carry on this journey successfully into some of these areas in navigating the developments, the risks, and I think they would have done half the job.
If I may add, so I think CFO should, of course, it depend on industry to industry and sector to sector, but CFO should always look for at least 5-year vision. That's number one, because in a 5-year vision, you can have a rule book for play to win. You can get into the sector where you can be the market leader or top 3 companies, because otherwise these things cannot be done in a short-term tenure. So that's one thing. And second thing, I'll not agree to this visualizing future and all is a CEO thing. CFO should lead it. That's what I believe, because they understand, see how whatever said and done, if things are not translating into money, a CFO is the guy who can push company to change strategies. He can help, he can push management to change the track. So he's better placed than anyone else in the company.
I just want to make one comment here, and I think Abhinav picked a little bit of piece of what I wanted to say, but recently I was having a conversation with Japanese investors, and very important point came, and this was a message from our CEO, that we want to build a company which is even there after 100 years. I mean, this came out, in a conversation, and given the context of today's session and, this particular panel, I would say that it's easy to stereotype a 1-year, 5-year, 10-year horizon, but if each of us are looking at a future, right, look at a very, very long-term future, okay, what 50 years, 100 years, what would customers want in that time frame? And could you work on some products and development, or could you allocate some capital to those projects which maybe you can, launch after 10 years or after 5 years? See, that kind of long-term vision would clearly keep the company ahead of the curve. And that would be my message to everyone.
You bring me to my next question that I was about to ask you, that, what according to you are these top 3 do's or don'ts that you want to, there is no rule book to life, but even there, what are those top 3 do's or don'ts that you want to, keep in mind as you chart out the roadmap for future?
So for me, it is very simple. First of all, getting 3 is the most difficult part, but I will still try. The first and foremost is return on time invested, ROTI. So for me, it's extremely important that at least 50% of my time is spent on not current issues. It's on future issues because current issues are expected to be handled by your one down people. The second most important is data analytics governance, how the CFO function can ensure that different stakeholders get what they need. And the third most important is how the CFO function can invest time with people. These people can be customers, suppliers, employees, your own people. So how can the CFO function prioritize investing time with people to chart out its strategies? Thank you.
Okay. From, I think, what I would say is, I think, more traditional in the sense that we have responsibility to make our organizations agile in terms of the digitalization and the data use that we are all going through. Currently, I think we are all adopting them, but I think the end use in terms of them being successful, I think the CFOs have a larger responsibility to make sure that happens. The second is in terms of the talent and the ecosystem that we live in, the talent attrition that we face, as well as how the finance is a partner in the ecosystem from an, moving away from a siloed approach. I think that's another key point I think the CFOs have to look forward to in the future to deliver. The third is, I think we have been thrust with the responsibility of championing the ESG responsibility of the organization, and I think we should all gladly embrace, because it's for the future of the economy and also from an individual perspective. So to embedding all these ESG imperatives and ensuring that the organization finds benefit of using or adopting these ESG imperatives, I think is a large role I think we have to play.
On to you, Rahul, now, your list.
I think it's very important for CFOs to stay a little paranoid, right? It's to basically anticipate change and then kind of, make sure that, you are preparing for that change. So you're retooling yourself, you're kind of, learning new things, you're kind of anticipating change. I think that's important. The second one, I think, is you have to collaborate more than what you've done in the past. And collaboration is not only internally, but externally as well. With stakeholder management becoming the central point of, the CFO's role, I think that's very important. And the last bit is like, you have to stay very authentic, right? Sometimes, what happens is that, especially with numbers, you start believing in stories that come out of numbers. And I think you have to sometimes take yourself out of, the day-to-day and the numbers and kind of feel the business, right? Talk to the customers, figure out, what is actually going on and keep things very real.
So I think, three important things I always believe is ideate, innovate, and inspire. You should always look at things critically. Whatever said and done, there is always scope of improvement in whatever we are doing. New ideas can make it more better from execution point of view. And by innovating yourself, you can lead you can become an inspiration for the entire industry, entire sector. And that is the real outcome professionals should give. Thank you.
Ideate, innovate, inspire, then with a little dose of paranoia. That's what, the gentleman here, thank you so much for sharing your thoughts on this wonderful afternoon. Thank you.